Let's work on a budgeted income statement example problem. So this problem says Shoemaker Company has accumulated the following budget data for 2020. So we're given sales information of 40,000 units for a unit selling price of $100. Then we're told that the cost of one unit is made up of direct materials, direct labor, and manufacturing overhead. So for direct materials, we have 2 pounds of materials per unit at $1.50 per pound. Direct labor takes 1.5 hours at $15 per hour. And for manufacturing overhead, it's going to be $8 per direct labor hour. Then a few other costs. We have selling and administrative expenses for $120,000, interest expense of $60,000, and our income taxes will be 30% of our income before income taxes. And that'll make more sense once we take a look at our budgeted income statement. So we need to take all that information and prepare a budgeted multi-step income statement for the year. Now, before we can do that, we first need to figure out our cost of goods sold. So we have all of our data over in the upper left corner. And we take a look at our direct materials information. So it's 2 pounds at $1.50 per pound. So one unit is going to cost $3 in direct materials. Direct labor, 1.5 hours at $15 per hour. We multiply those together, and one unit is going to cost $22.50 of direct labor. And then manufacturing overhead, we're told, is $8 per direct labor hour. So it's 1.5 hours of direct labor. Multiply that by $8, and we see that our overhead will be $12 per unit. So the cost of one finished unit will be $37.50. Now, we didn't just sell one unit. It tells us that we sold 40,000 units. So our cost of goods sold is going to be that $37.50 times 40,000. And that comes out to be $1,500,000. So that's going to be our cost of goods sold. Now, we can use that information to prepare our budgeted income statement. And before we put any numbers into the statement, let's just take a look at the framework here. So how this is going to work is we are going to go with our sales minus cost of goods sold to give us gross profit. Then subtract out selling and administrative expenses to give us our income from operations. Subtract out interest expense to give us our income before income taxes. And then subtract out our income tax expense to leave us with our net income. So let's work on figuring out our numbers here. So for sales, we sold 40,000 units at a unit selling price of $100. So we multiply those together, and it shows that we had $4 million in sales. Now, cost of goods sold, we just solved for that. That's going to be $1,500,000. And now for our gross profit, we take our sales minus our cost of goods sold, leaving us with $2,500,000. So that's our gross profit here for the year of 2020. Now we need to subtract out our selling and administrative expenses. So we're told that those are $120,000. We subtract that from our gross profit, leaves us with an income from operations of $2,380,000. Then we have our interest expense that was given to us of $60,000. We want to subtract that out, giving us our income before income taxes of $2,320,000. So now we come to the income tax expense portion. So we're told that it's going to be a 30% tax rate. So we take our income before income taxes, that $2,320,000, and we multiply it by 30%, or 0.30. And that leaves us with an income tax expense of $696,000. So we subtract that out, and that gives us our net income of $1,624,000.